Hey guys, it's Tanner Manson from Future Investing, and today I want to talk to you guys about Visa stock. Did you know that about 30% of transactions are still made in cash? And whenever we look at a year like 2020, whenever we see this massive push towards a digital society, you can't help but think of a company like Visa whenever you think of a company that's going to benefit the most from starting to go to all digital transactions. In this video, we're going to cover three main topics. The first one we're going to cover is how Visa actually makes their money. Secondly, we're going to talk about how they plan on doing continued growth. And third, we're going to review some of their key financials and go over my opinion on its current valuation. Some of you guys already know this, but I have to say it. Although I am actually a licensed financial security advisor as my full-time job, none of these stocks or topics that we talk about today are in any way my recommendation. This is merely my opinion, and you can choose to do what you wish with this information. Now, do me a favor and hit the like button down below. It really helps out the channel. And subscribe if you want to see more content like this. Now, let's jump right into this and talk about one of the most profitable businesses on the entire stock market. Visa is jumping into a lot of different things in business right now, but over 90% of their actual revenue is made up in three different categories. The first category would be service revenues. This is the part of their business that they take a percentage of your money because of the product that they offer. Because it's percentage based, the actual amount of revenue that's being created in this category is mainly done because of volume that they're transacting. For example, a pack of gum would not bring in the same amount of revenue that someone was buying like a boat off of auction or something would. Right? These aren't flat fees, these are percentages, which is an amazing idea because there's already this built-in inflation hedge. For example, if everything starts to go up by 15% or some crazy inflation that's going to happen, then PayPal would already receive that extra 15% in the amount that people are transacting, making sure that Visa always takes the cut that they're wanting to receive. And whenever you're talking about transacting $8.8 trillion within a year, this makes up such a large amount of money because let's say that starts to go up by 3% or 2.5% for inflation. Well, just take that number and add that to their value, and then that's how much they're going to start making for the years to come. And that's just one of their revenue streams, all right? So we have, for number two, we have data processing revenues. These are the microscopic fees that Visa takes for authorization, settlement, clearing, and the overall maintenance that it takes to clear these orders through their vast payment networks. And this is really what makes Visa what it is today. It's the ability within milliseconds to be able to go from the point of transaction, like in the store, tapping your card against the machine, to sending it over to the financial institution for approval and back over to the point of sale where they will accept your purchase and you can walk out the door. Now, this is a tiny fee, but whenever you transact billions of transactions per year, it really adds up very quickly. And last but not least, for their third biggest revenue stream, it's international transaction revenues, or currency conversions. This is that additional around 1% that Visa gets to take for transacting your money from USD to Canadian dollars or Canadian dollars to Australian dollars or whatever. And people don't really realize this, that whenever you search up the spot price of two currencies and then you see that amount, and then you actually go to the bank or you go somewhere online, you want to purchase it, the amount that you're paying is much higher. It might be upwards of 3.5% higher because the bank takes their amount that they want to make the transaction with, and then Visa takes their amount, and everyone takes their cut until you actually end up switching the currencies, right? So, and the amount that this happens on a daily basis to take a full 1% of every dollar that's transacted into a new currency for Visa is immensely huge. Now, this is their main business, or these three categories. But you have to understand that Visa doesn't take on any risk by loaning out any of this money. They only make sure that point A is happy and the money gets to point B and they get approved on the way over. And so the risk overall in terms of defaulting on their payments is non-existent. Visa's main risks as a business are macroeconomic scale, where we have to worry about, is the economy still healthy? Are they still growing? Are people spending more money each year? Is inflation going up? Like, these are the things that make Visa a growing business each year. Which leads me on to my second part, which is, how is Visa growing today? And aside from the main part of just, the amount of cash that's being used each year is going down and the amount of digital use is going up. And aside from Visa and MasterCard, there isn't a big player in this space. It's through acquisition and mergers, which, if we're talking acquisitions for Visa, it's very hard not to bring up the acquisition of Plaid. This was an acquisition from Visa and Plaid to make a purchase of their company for $5.3 billion. Plaid's products allow consumers to conveniently connect their financial institutions with thousands of apps and services that they like to use each day. Visa's acquisition of Plaid represents both a new entry into new businesses, as well as complementary enhancements to Visa's overall business and network. But this acquisition was all too good to be true. The U.S. Department of Justice had filed a complaint in the U.S. District Court. They thought the acquisition would threaten competition and sort of become a little bit of a monopoly for Visa. Once that was filed, Plaid had backed out of the deal and they wanted more for the acquisition, regardless of the complaint that the U.S. Department of Justice had. Now let's go over some of these key financials because honestly, you have to hear some of what Visa is doing right now. Did you know that over the last 3 years, Visa has returned over 90% of their free cash flow back to the shareholders in terms of dividends that they're paying out to the shareholders, as well as the rest of the money they're using to buy back stock? And this is with profit margins of the company of over 50%. These are all things that I've told you guys are my favorite things in companies. These are strong moat companies, very hard to get into the space. They're working the business for the shareholder and the overall business, especially in the tech space like this, especially whenever you have your own space and just gripping a sort of monopoly like this. You cannot get profit margins like this in any other type of business. These are some Facebook level margins. And this led to a 28% annualized return for the last decade. And unlike every other tech stock that has been going on since March and just blowing up 4 times, even though we know people are transacting through debit and credit more than they've ever had in their entire lives. And this is why I think it is such a dividend growth company, is because they have so much room to continue to grow. Just because they're $400 billion market cap doesn't mean that they can't be 5, 6, 7, $1 trillion market cap. I mean, they are the centerpiece of every transaction that happens on a digital platform. And going back to the dividend really quickly, they pay a 0.61% forward dividend. This is not exactly high like whenever we're talking about my other stocks like Enbridge or something along these lines, but the payout ratio is only 25% in this company, which whenever I talk about financial institutions is about half what they're able to pay without giving out any extra opportunity cost to buy through acquisitions, or you can still remain a very competitive growth stock while paying out 50%, especially when you're in a space like Visa is. MasterCard is already paying out a 32% payout ratio, so if Visa wanted to copy that amount, that's an additional 7% already that they could go up to. Right, but they keep growing each year, so that payout ratio actually goes down unless they continue to increase the dividend, making this a truly dividend growth stock. I keep saying it, but it's so obvious to me that in a world where we're switching into more and more digital currencies, and this includes crypto and everything, I mean, Visa even has cards to use for Bitcoin rewards. So it's not like they're getting out of style or moving into old spaces. They are moving into the newer spaces and staying concurrent. Plus, it has all the factors that I like. I'm a big Warren Buffett fan, and even he was buying this company back at $11 a share. And I guarantee you the only thing he's doing with this stock is regretting that he didn't buy more. I couldn't imagine what his dividend would be at that price. I'm sure it's an insane amount. Plus, it's probably going to grow to $300, $400 a share, right? So it's an extremely exciting space, especially whenever you look at the percent of this stock that's held by institutions. Right? Smart money. You're looking at about 96% of all stock in this company is held by the smartest investors in the world because they understand that this company is not going anywhere. It's a needed space and it's very hard to gain entry into this space because the two main competitors, Visa and MasterCard, have it very, very locked down. At this point, I don't care which one you buy, whether it's Visa or MasterCard. I think maybe it would be good to have some sort of position in this space, but it's not a recommendation. It's just one man's opinion. But in my personal philosophy, I think that Visa is a bigger and better company than MasterCard, and they're selling at a less of a premium than MasterCard because Visa is only trading at a forward PE of around 30, which is high, and I could possibly get it on sale if any sort of dip happened, which I am absolutely positioned to do so, but I mean, I can't pass up the price that it is today. Let me know what you guys think in the comments down below, and let me know if you guys want to hear any other topics. If you could, as always, like the video if you haven't already, and subscribe down below if you want to see more content like this. I know it's been a little bit since I posted last, but don't worry guys, I got a ton of topics to talk about that are all lined up. I just need to find some time to record. I'm glad you guys are enjoying my content. I've been loving all the support, and the comments are actually my favorite part. I love having a discussion with you guys. Anyway, until next time, hope you have a good one. Stay safe trading. Bye for now.